If you're running a six-figure service-based business and you never had a serious conversation with your accountant about your tax structure, then this video is for you. This might potentially put back 5 figures in your pocket every year, legally, without any changes to how you operate your business. I recorded this video originally for a client of mine, but the moment I sent it to her, I realized more people at this revenue level need to know this. So that's why I'm sharing this. Hey, I was looking at your business structure this week and I found something that is likely costing you a significant amount of money every single year. And this is money you're legally entitled to keep. So what I want to do in this video, I'm going to walk you through this, and it's not going to be complicated, I promise. And by the end of this video, you know exactly what to do next. Okay? So right now, your business is a single member LLC taxed as a sole proprietor. And so there are 2 parts here that we need to distinguish, which is very important for when I start explaining the rest. So the LLC is your business entity and your sole proprietor is your tax entity, right? And this is a very common structure. This is how most people start because it's simple, it's low maintenance, it asks almost nothing from you. And so it made complete sense when you started your business to set it up like this. But now at your current revenue level, it's costing you. So let me explain what I mean with this based on your numbers. If your business is not located in the US, I still recommend you to watch this video to get a little bit of an understanding of how it works with taxes, because a lot of countries have different rules, but they work kind of similar. And then hop on a call with your accountant to really figure out what the regulations are in your country for your specific business. So your revenue sits at 420K. And your expenses are at 60K, which means, and I showed this already to you, your profit sits around 360K, right? That's what we talked about. Now, what's happening? The IRS currently treats your entire business profit, so that is this number, as personal self-employment income, every dollar of it. So that means that in terms of your taxes, you pay income tax, obviously. So this is federal and state. And you pay self-employment tax. Some people call this payroll tax. And the payroll tax, the self-employment tax, has 2 parts. It has Social Security and it has Medicare. And this is going to be taken from the total profit that you're making. The self-employment tax sits at 15.3%. Sorry. And it's not as clear as it is because Social Security is around 12%, Medicare is a bit lower. But I don't want to go all into the details. Your accountant can run the exact numbers for your situation. But what this means is that based on your profit of the $360,000, more or less, you are paying $35,000 a year in self-employment tax alone. So this is your self-employment tax. Now, and all of this is before income tax, right? Because I didn't calculate that because it depends on so many different things. And again, your accountant can find the exact numbers. Now, I want to show you another option. I call this an optimized option. So the thing is, and a lot of people get this wrong, your business entity will not change. It stays an LLC. What you want to do is get taxed as an S-Corp, or this is what I'm suggesting. And you may have heard of the term S-Corp, and a lot of people think, oh, an S-Corp is a new business entity, so I need to close down my LLC and then open an S-Corp. No, this is not the case. You're not dissolving your LLC. You don't have to start over. You stay exactly as you are. What you simply do is file an election with the IRS that changes how you're being taxed. And this is one form, and your accountant can do this for you. Now, what's important is what is the effect that this has, right? What are the changes that are coming from this? So let's take the numbers that we have here. They stay obviously exactly the same. Now, we're not going to dive straight into taxes because what happens when you're taxed as an S-Corp, you split that profit, the 360,000, into 2 buckets. And we have bucket 1, which is your salary. And so this needs to be a formal payroll salary that you pay yourself. And we have a bucket that is called distributions. Now, the cool thing here is, and this is what I wanted to show you, the first bucket is where you pay, obviously, income tax and self-employment tax. So that is the 15.3% that I was sharing with you before. Now, with bucket 2, it's really awesome because you only pay income tax. There's no self-employment tax. So then you might wonder why I'm not putting everything of this whole profit into bucket 2, right? Okay, so this is where things come in, and we talked a bit already about your salary, but the IRS requires that the salary that you pay yourself in bucket 1 needs to be a reasonable compensation. So that means that it needs to reflect what someone in your role, like an online fitness coach, as a business owner, generating at your level of revenue. So what would that reasonably be, that kind of salary in the market? What would you pay somebody else for that? And that's the salary that you need to have, because what we talked about already, the $1,000 that you're taking out currently, that number would not fly with the IRS. And what happens then? It's too low, it creates audit risk, and this is the last thing you want. So for someone in your role and your revenue range, usually a salary is between 70,000 to 100,000 K. Again, your accountant can do the exact numbers. So instead of paying self-employment tax on your full profit, your full 360K, let's say if we do $90,000 here as your salary, you only pay self-employment tax on this amount. You see the difference? Because here, if you would take out the rest of the distributions, you don't pay self-employment tax on it. So the big difference between both of them, what that means, self-employment tax, would be instead of the $35,000 that was taken from the 360, now the self-employment tax is only taxed on the $90,000, which means that we're sitting around 13,000 USD a year. I mean, do you see the difference alone? It's like $22,000. This is saving you at your income level like 5 figures a year, every single year. So how am I going to do that? My light just switched off. I want to be very open with you because it is not free to switch to an S-Corp, because there's some paperwork that needs to be involved. There's some more admin. There's some more corporate formalities that needs to be done. You need to have payroll software. A lot of people use Gusto. It's like $50 a month or something like that. Also, your accountant's fee will likely go up because there's now a separate business tax return. And the total overhead would be around $1,500 to $3,000 per year. It still makes sense, right? You see that these costs still work in your favor, even though it has some extra cost. Now, whether this is right for your specific situation, like I said, your state, your expenses, your structure, this is what your accountant can confirm. I'm not a tax advisor. I'm not telling you to do this. I'm telling you to ask. So this is exactly what I want you to do right now. I want you to send one email to your accountant, and it can literally be something like, hey, I've been looking at my tax structure and I wanted to ask if electing the S-Corp status makes sense for my business at my current revenue level. Can we schedule a call to talk about this? That's it, just one email. You're not committing to anything. You're just starting a conversation that could save you thousands of dollars a year. Just one meeting. So one more thing, if you want to apply this to the current tax year, the IRS deadline for S-Corp elections ends on March 15. Now your accountant can apply for it after, but the sooner the better. So drop me a message when you've done this, and I'm very curious to hear how this goes. Most founders are so focused on growing their revenue that they're missing out on money that's already inside their business. And that's a big part of the work that I do. I help them clearly see this. Now, the tax structure is just one part of the things we do in the first month during our partnership. We're also talking about financial clarity. We're talking about how the business is built, operations, everything to help you create a sustainable business. If this is something that you need, there's a link below this video, and come say hi.